Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, February 27th, 2023. It is 1:15 p.m. Eastern Time as I'm starting the video, and what I'll do in this one, we'll keep it relatively brief. I'll do a quick update on the equity markets, and then roll into some trade ideas. I had a request. Actually, I'll just stick with the request from one of the recent comment sections in the front page. Somebody asked to update commodities, which I'll be glad to do, and so that's what I'll do on the bulk of this video. Is we'll just rifle through my commodities watch list really quick. Go over some of the things like the grains and natural gas will be in there. And then one trade idea. Somebody mentioned one that I actually had on my radar. I'd covered it quite a bit in the last, since the start of the year, when I was covering all the Dow stocks and highlighting selective longs and shorts within the Dow 30, and I'll get to that, one of those being J&J. It's at a really good support level. So let's dive into the charts. This is a daily chart, and like I said, on Friday we had a confluence of support. We had QQQ right there, a perfect back test of the 200-day moving average. That's this blue line. If you can make it out here in the video, that's the 200 simple moving average. You also had, of course, the S&P 500 make a perfect back test of the primary bear market downtrend line. That is, like I said, then a very significant level. And told you I'd be surprised if they didn't come in and buy it. I expected a bounce because you had not just the 200, but the 200 simple as well on SPY. That's the blue line there, and a perfect back test of the trend line. And so they did. They stepped in and bought it, and that's where they should have. And so that was a very objective long entry. And then just drilling down to the shorter term charts. Let's see. I've got this one out to you this morning. We had that's where we bounced. That was this is the chart from this morning. That was the primary downtrend line back test. So it was good for a quick bounce trade. Again, this is, and I'll try to always speak to the active trader as well as a swing trader. This is active trader world. So, go long on support, go close those longs and or short into resistance. That was at 401.33 level on SPY, and on ES it was about 40.29 there. Looking for a minor pullback, and then I posted on here that I went ahead. Let's see, where was it? Well, here's the J&J trade. I'll get to that in 1 second. But followed up under that homepage post as I continue to favor actively trading the market as it continues to grind around. I just covered the NQ short. Remember, the reason for closing out is because the S&P was at really good resistance, although my preferred trading proxy often, although at times I'll trade ES or SPY, but I was trading NQ. And so reverse there and reverse back to long right here. That's a chart posted. There's a nice clean uptrend line on both NQ and QQQ. And so that was good, and that's all I'm looking for right now, just gaming this little micro bounce up to that 12,151 target. So that was, let's see, I posted that at 11:36 down here at the bottom, and let's go to it now, and then I'll move on. That was also on a 15-minute chart, which is the time frame, one of the time frames I'm focused on lately, and there it is. So there's Friday's lows, go long. That was when ES and SPY right at the button when I got that post out to hit those highs, the resistance on SPY and ES. And then here's the trend line on NQ. So a perfect area, long, short, long, and I'll either get, it'll hit that bounce target. I have it just shy, a couple points shy of that 12,151 resistance. Or if they take this level out, you have a confluence of support there. By the way, that was also price support around 1280 and the trend line. So any break of that will probably go lower. So that, again, markets are conducive to active trading right now. And so, I'm going to share those setups a little more than I normally do. And at some point, we'll return back to a good old-fashioned swing or trend trading market where we can, position for a move of, 8-10% or greater, the next big move, go from there. So at this point, if you want to know my intermediate term views, My convictions aren't super high, but there's several scenarios. One that this bounce just gets sold into soon, and look, we're not far from it, so it's easy to trade. You know, there's the primary downtrend line, the 200, pretty much yes, or Friday's lows, or not far below that. Any break of that level, you're going to take out a lot of key support levels, and then that opens the door, increases the odds we're going to take another major leg down, because you'll take out the 200-day simple, you'll take out the back test or the primary downtrend line from the bear market in the S&P 500, and etc. Now, until unless that happens, we could easily bounce up and test this downtrend line right here, or possibly, and again, this is as I've been saying for a few weeks now, my most bullish scenario, but it's still a bearish scenario. That would just be a marginal, meaning slight new high to give us some positive divergence on the daily, and then have another leg down. So because my degree of confidence on which one happens isn't very high, I'll just stay in that active trading mode, and because I don't want to, you know, stay short and give back if we get a marginal new high, and that's, you know, going to be from yesterday's lows about 6-7% possibly. I mean, all I can really tell you as a swing or a trend trader right now, that it's more objective to be long here, because you have a confluence of support. You're much closer to support than you are to resistance. So, you know, from that aspect, you know, and if you, let me say this, I also pointed out being objectively, objective levels to short back here. I was very, very clear the risk reward clearly favored being short. So if you're playing that game called the long game, you know, you're holding off, you're going to ride out any counter trend bounces, it's fine to stay short. I just wouldn't be shorting until unless, you know, we take these levels out right there. All right, let's dive into the other stuff. On that same post, this was right here. Let me give some props to the J&J setup from trade 0039. I have the same support level there. In fact, you know, I covered that since the first of the year. I covered J&J several times in the video, so I'm going to show you my chart as well. And it, you know, it's again largely contingent, and I think I said that on that reply there, largely contingent on the market not melting down. If the market breaks support, then just because we're at good support on J&J doesn't mean it can't be broken. But this is that support level, 155.85. You can see it was 1, 2, 3. We just sliced through and recovered it quickly, so I'm going to count that as 4 reactions from above, and most recently too. That level has contained all pullbacks since the bear market started back at the beginning of, actually the bear market started at the beginning of 2022. It's contained all pullbacks pretty much since the beginning of 2021 or late 2020. And then it was resistance there. So on a scale 1 to 10, that's up there. That's a really high, call it an 8, call it a 10 if you want. It's really good support. Now, the thing about support doesn't guarantee it's going to hold, but the better, the more well-defined it is, especially how oversold we are. PPO is still pointing lower, but when you go to the 60-minute chart here, you can see there's a nice clean downtrend line. So the way I view this one, it's an objective long at support because of those reasons, oversold at support, and positive divergence here on the 60-minute chart. And an add-on, you know, maybe take a half or even a full position with a stop somewhat below that support, ideally on a daily close, and or you can add to position on a break of this 60-minute bullish falling wedge pattern. And of course, if the market were to, you know, break support and start heading impulsively lower, sooner or later to take J&J down with it, because it's a S&P and Dow component. It might even be in the NASDAQ 100, not sure. Okay, we'll roll into commodities, and I'm going to go through, well, no, let me just start with gold, and then I can skip over them on my commodities watch list. This is it. This is that long awaited and anticipated and predicted pullback to that primary uptrend line right there. And there's the reaction so far right off it. Perfect kiss. So that was my target from this divergent high, rising wedge, the trend line break here, and we hit that. So this is my pretty much all-in buy signal for gold and silver to re-enter. Remember, we sidestepped and actually profited on the pullback in gold, silver, the miners, by, you know, aligning those charts, of course, first and foremost, but also with the euro US dollar. So we got the pullback in the euro, which was the catalyst for the pullback in gold and silver, along with their own technicals, of course. And now we're at support. No guarantees that it will hold, but that's what I was targeting. So no change in my trading plan, and this is a good chance this is the end of the pullback in gold and silver. Should we take out that trend line with conviction? Well, you have a primary downtrend line right here. Maybe that gets back tested, and that's going to lead to a deeper pullback in gold and silver. It's not my preferred scenario, but it's kind of like the stock market. It's more of my, let's call it my most bearish scenario from, this calling for this pullback in gold and silver and the euro would be that we take that out and we go and back test there. So it's, to me, more of a matter of, is the correction over? Is there going to be a little bit more downside? I think it's over. I think a good enough case is, when something's in a primary bull market as gold is, let's not forget that, turn off all our lines, go to a weekly chart. This is gold, and this is gold's in a bull market. So on a bull market, you buy pullbacks to support, and you don't try to go for the moonshot trades on pullbacks. On the long side, you favor the longer targets, the higher targets, but on the when trading the corrections, I try not to get too greedy. And so this is a little bit of a busy chart. Let me see if I have a cleaner board for gold. No, I don't. But we'll show you here. This is the level I had, 167.93 right there. It was pretty decent support back here. You can see all these arrows. And then we finally broke that support. We back tested and got rejected. We floundered around it here, and we're on it right now. So PPO is wanting to turn up. RSI is almost oversold in a bull market. You buy oversold readings because they're rare. They're usually one and done tags. Not always. We got a little bit overstretched here and here, but again, there was a lot of bullish developments back here, especially the breakdown and recovery of 158. So that's my preferred scenario on gold. Is that time to get back in those, and if we go lower, I'll be a buyer. Where it really would fall apart or really put a big crimp in the longer term bullish case is a move back below 158 right now. And that's quite a bit ways down. I don't think it'll happen, but if it does, I'll let you know at the time my thoughts are if and when we get there. Silver SLV, the silver ETF, nice support, 1911. You had its support, that support broke. We rallied, back test, rejected, rally, back test, rejected, rally, breakout, successful back test and rally, and now we're back testing 1911. I don't know how you cannot like silver here. I know I'm contrarian. Most people say, well, silver's in a solid downtrend with no evidence of reversal. That's fine. That's what I do. I'll step in and buy there. And you can use a tight stop above today's lows, relatively tight stop, a little bit above those lows, or give it a little more room, and maybe it falls down to 1807. But I think there's a good case can be made to step in here for the next swing up to at least to this uptrend line. I'm sorry, the downtrend line right here off the highs. And that silver is what it looks like on the 60-minute chart right there. Positive, aka bullish divergence there on the 60. And I think you have that on gold too, GLD. Yeah, you do. A little price channel, some support there, positive divergence. You can see down below here. And GC for your gold futures traders or silver. I do have that chart as well. Let's see where I put it. GC. You can see silver. I'll find GC for you in a second. Let me just show you silver. This is a 6-month chart, 2-hour candles. Here's a primary uptrend line that goes back to the left of the chart. There's more reactions over there. And so we're at that. And there's your positive divergence. I just need to tweak this line ever so slightly. Right there. Boom, there we go. The almost equal lows there on the RSI. And again, this is a 60-minute or 2-hour, 120-minute candles. And so there's your divergence, and that's where silver is. Gold, of course, silver is going to follow. I always say it's big brother gold. Let's see where gold is right now. Oh, there it is. Got it. Okay, there's GC, 60-minute chart. Nope, 120-minute as well. Just so I could zoom back and show you this longer-term uptrend line. That was where we started getting out of gold and getting ready to short it, and shorted it on the breakdown of the trend line. And then again on the break in 1914, That was an additional sell signal, and here we are. We're have strong positive divergence, aka bullish divergence, and here's the added this trend line here. Maybe that gives us a wedge. Pop that. First target 1851.50. These were targets on the way down, but now they should be resistance. I may have to move that line. Let's just say, you know, again, if the pullback's over, then the target's going to be off this chart. It's going to be higher than the recent highs. So at this point in time, that's what I'm looking for, and we'll see. So these are more swing, get back into you know, position trades, trend trades, swing trades. GDX, of course, added to that again, and have my full allotment now. I have room to add if I want to, but I don't need to. I've been scaling it, as I told you, for the last week or so here. And you know, there's good support if it has another jog down. 26.12 may or may not get there, but what I can tell you is GDX took out the downtrend line right there. There's your breakout candle today, trading above it. Nothing. Oh, I meant to circle that, but I think you can see it in the video. If you can't, there it is. I would like to see us build on that. Get the farther away we get from that trend line right there, the greater the chance the breakout will stick. And if you zoom down to a 60-minute chart, this is what it looks like. Really actually right on the trend line on the 60, the way it might, you know, if you want to add on, or if you haven't taken it yet for whatever reason, a break of that trend line should do the trick. And you can see same thing with the gold and silver. You just extend these divergences, and that's it. So looks pretty good. And there's some also, you can draw a little, put that line down here, just borrow that line, put it right there. It was nice, couple nice reactions in there and a gap. Okay, I'll rifle through my commodities watch list. These are all ETNs and ETFs that I have in no particular order, just the order that they're in the list today. And this is UNG, which I already updated this morning. Anywho, you had really nice resistance there at 891. Remember, that was our breakout candle right there. We consolidated in that little trading range. And so very objective time. If you've been long the last few days in this run up to either book profits, or if you're long and you're holding out for more, wait for a break above that level. Probably going to get a pullback would be my guess. There's a 60-minute chart. You can see that same, that's that recent trading range, and it's very well defined, right around $9. And there's an uptrend line that have taken out, probably bring us back to the bottom of the range. That's 807. But I'm really looking for pullback somewhere in the middle of the range. I got the chart out to you this morning, and I didn't have the line on, but I told you about 257 right there. I think is a good minimum pullback target if you want to take a shot at a pullback trade. And be careful, you know, natural gas, and I think if I've said this 1,000 times over the year, but if it didn't sink in, I think it did recently. When it wants to run or go in one direction, it can keep doing that day after day after day after day. So just like it was going down, 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 it could keep going up and blast on right through there. But I suspect we'll get a pullback, like I said, at least that level. This would be a very, very likely target as well, back down to the bottom of that trading range. Again, this is just looking at it here on the futures. And when we go back to the daily chart of UNG, I could still see the possibility, because of a one more thrust down that even takes out the lows and extends these positive, aka bullish divergences right here. Gives us that a marginal new low. So all I'm trying to say is the bottom may or may not be in. When the bottom's in, quite often it's explosive, but I've gone over the charts in the past and showed you the similar times we've had. Natural gas has rarely ever dropped this low in price for decades, and when it does, quite often it does a low and then jogs down, puts in a marginal new low with a little bit bigger divergence. So I'm open to either one, and again, like this one, just keeping it active. Like I said, no reason not to book some profits there or try to game a short pullback trade with stops not above. It's, you know, it's trading 101. That's resistance. If you short 891 on UNG or the comparable level I just showed you on natural gas, you can have a stop or scale out with a few staggered stops not too far above it, or wait for a breakout to add to long positions if you want, whatever you're inclined to do there. Next up, cotton. It's kind of a messy chart, if a little bit, but back here, somewhere in here, I mentioned it on cotton futures. Positive divergence along, we ran up, hit my first target was right there. That's T1 was hit. We pulled back, we've been consolidating, and we had our typical reaction being a pullback and or consolidation. We've had both there. There's a little bit of an uptrend line there, and I still have these longer term targets, T2, 3, and 4, but there's also this downtrend line that's going to come into play. That's just a dynamic level. Hard to say if and when we get there, but that we probably get a reaction. That looks like if cotton starts to move up, we'll probably hit it coming around when T2 gets hit there. That's BAL. LD, I don't have much on that one. USO at trendline support right here, a major trendline support. It's in a triangle, so crude's going to break one way or other soon. Hard to say, but being that we're in a bull market, probably get the upside break, and your target would be here, minimum initial target 78.41 right there. Or you can short it on a break of the trend line, and then we might move down to that 58.58 target. Remember when we're up here, called a top on crude with a swing target of all the way down to 58.60, which is that level, and the uptrend line. But what happened is the uptrend line came in first. That's why I would say uptrend lines are dynamic. Their price levels change on the day-to-day, whether it's an up or downtrend line. So that was effectively the target hit, but it's still key support. We've been dancing on it several times. We've had 4 distinct reactions since. So downside break would take us down to 58.60. Upside break of the triangle would probably take us up to 78.40, and that's probably most likely going to have an impact on the stock market. So let me show you what I mean by that. Remember, everything right now, it doesn't matter what earnings are. Earnings can be crappy, they can be great. Everybody's not they're focused on what the Fed's going to do right now. That's the primary driver of stock prices. So if crude were to break out and mount a rally and get anywhere close to that 78.40-ish level, that's going to be inflationary, and that would most likely, not absolutely guaranteed, but most likely coincide with that next leg down, with the S&P breaking support and the NASDAQ going down lower. There's sometimes the opposite can happen. You can see the stock market rallying on strong economic growth. Everyone's talking how resilient the consumer is, and maybe you'll have a surge in demand for crude, and so there's a myriad of factors that play in supply and demand. But in itself, if you're going to trade crude, that would probably be what would happen if we rally up. And if we break down and run down to 58.58, you're going to hear all the chatter about how the inflation continues to fall, and the Fed can back off now, blah blah blah, and stocks should like that, unless that's demand destruction there from a big powerful drop in the stock market. That is a possibility as well, where we can see complete demand destruction from the stock market cratering and falling pretty hard. Either way, trade on its own technicals. That's all I'm trying to say. Oil's another crude ETN. That's a K1 free. You can draw a little bit different trend line there, and you can see nice price support about $40 on OILK. GSG, a broad-based commodity index fund. You can see it pinching in a triangle. So it looks like, and this is pretty heavy weighted in oil, so it's going to do whatever crude oil does. Upside is bullish for it, downside's bearish, just like oil. It's got good support if it does break to the downside, which I think would contain any pullback. 1823. KOL is no longer trading. I just keep it up to remind me to check the coal stocks from time to time. This is COW, cow, which is cattle and hogs, and it's kind of floundering around. UGA, unleaded gasoline, kind of doing the same thing, range bound lately, going nowhere, but still elevated gas prices, relatively speaking. If I zoom back here, this is 2017, 2018, 2019, 2020, it cratered with demand destruction from the shutdowns, and then we all know what happened since. And so this tells us that inflation, although it's abated off its highs, it's certainly still elevated and not what the Fed wants to see at this point. So crude's kind of just holding up, or gasoline is holding up in this range. You can box it in, and that's also a technical level to watch if you want to trade it. Bullish for gas, bearish for the stock market if it breaks above that range, and vice versa if it breaks below it. Gold I already covered. DJP, just another commodity ETF, with a downtrend line. Actually, this downtrend line right there has a positive, aka bullish divergence, which tells me most likely will rally up, break above that, and resume the bull market in commodities sometime soon. And it's also right above that $31 support. SOYB, soybeans. Here's one of the big three grains right there. Still at uptrend line support and flirting with these highs. You have 1, 2, 3. You can see it's just you could break out to all-time highs and continue to run and resume its bull market. Remember, like everything, a lot of these commodities coming off, this is the end of a multi-year, a decade plus bear market, about 12 plus years, and this is a bull market, so more likely we're going to break to the upside. If we do break to the downside, it'll just be a bull market correction. It could take soybeans down. You can see my levels are all marked on the chart, potential targets. CUT is a timber ETF right at support right there. Boom, and there's a downtrend line. GCC, this one kind of gapped down. It must have had some kind of split or reversal that wasn't a stock split or reverse split, or no, split that wasn't reflected in the charts. I don't know what went on there. They did something, so I'm not really focusing on that one. JJS, that's just the softs, various soft commodities. NIB, cocoa, getting a little lofty here with some divergence, so I pointed this one out bullish way back here. We caught a lot of that trend so far, and here's a downtrend line, larger downtrend line. I could make it up there, but I don't have a very good uptrend line. That's the best I can draw right there. It's not bad. Pullbacks to that trend line, but ultimately with this negative divergence, we could get a correction in cocoa before the next leg up. So really wouldn't be chasing it here, and if you took it before, just continue to ratchet up stops and let it run if it's a long-term trade. MOO, agribusiness ETF, that has companies like John Deere and the likes, just kind of floundering around. Really, a lot of Dow components and S&P components in there, so they're, you know, resuming, or even some of them starting their bear market finally. Wood is another, just like Cut, it's just a different company's timber and forestry ETF right at support right now. JO Coffee, I threw this one out as a short trade last week, down today. So, you know, of course, so was KC Coffee Futures. I didn't really want to go into all the futures because these videos will go forever, but this is, I wanted to say that it's really right at or just below the trend line. I can tweak this and make it a benefit of the doubt line by pulling it down. Here, let me show you what I'm doing. So coffee just needs a little nudge. Let me try to zoom in. There you go. And take that trend line. And I zoomed in too tight, guys. Sorry about that. I have to pull it back here, put it on the low, which I did, come and capture that low, and that puts us right on the trend line. What I was doing is refitting the trend line, and that's it. We're right on uptrend line support. I still like it. I'm still short, and I plan to add on if and when that level goes. There's a little bit of price support just below, right about here. You can see that reaction high, and breakout back test. And so we're, sorry, a little video snafu there. So we're right on the trend line now. BOD level, benefit of the doubt's about 183.75 or so. Break of that should take us down to that sold target zone I gave you. I'm not looking for a moonshot on this one. It's in a bull trend, just looking for a pullback trade down to that support zone, 172 to 174.50ish right there. All right, a few more. DBA, that's agricultural ETF. This is just chock full of various ag commodities such as cattle, soybeans, sugar, corn, cocoa, wheat, coffee, hogs, cattle, cotton, and the likes. And really, really good support right there. And that's really shows you where, you know, that breaks. It's going to be bearish, obviously. And I can't remember last time I highlighted, but I believe it would have been on that support level as a bounce trade. I'm sorry, a re-entry. This is more of a swing or trend trade if you're trading the commodities bull market, which I believe has plenty of life in it. In fact, it's still just in the early stages. That low right here was, as you can see down here, divergent low, strong positive divergence there. So that likely can take us up to new highs and beyond over time there in DVA. Corn, not so crazy about this because I had this trend line, but I could draw various trend lines. I'll show you as ZC, but corn, I wouldn't add to corn now. If anything, maybe we want to start, if you have corn, the one I highlighted recently was wheat, but corn and wheat tend to move together. And this one's just broken down here. In fact, let me pull up the ZC chart since I'm not in it. I've been trading wheat. I'll get to wheat in a second. I have that as a swing position, but let me look at corn. Yeah, so you can see corn broke this this is a 6-month 2-hour candlestick chart. I did have it marked up, broke that level, and boom, they're selling corn hard. Wheat's down today as well, but still, I still like it. But with corn breaking down, and wheat has come down below the uptrend line, at least the way I had it drawn here, but you still have positive divergence. So I'm still sticking with wheat. Again, it's one of many trades, and I'm in my swing positions, my swing accounts, and I'm going to give this one a little room for now. Still like the outlook, longer term outlook, and the charts, and you can see it's made a marginal but still divergent low. Strong positive divergences on wheat. And then this is what it looks like on ZW wheat futures daily chart. So on that one, and this is more important than WEAT, because these are the futures, and that's what WEAT is trying to track. There's the trend line right there, the trend line that at least I have on my wheat futures daily chart. Multiple reactions, a breakout recently, and this is the first back test, unlike the way I had that trend line on WAT, and that's why I still like this one. So strong positive divergence. If you didn't take the break, well, and we also hit my first target. It was 809 right there. Typical pullback, and so if wheat behaves as the charts indicate to me it will, we should rally off this back test, run up to 809, maybe one reaction again, maybe not, and then continue on up. All right, a couple more to go. JJG, that's just a combination of wheat, corn, and soybean. It's an ETN that holds all three, and that one's at support, trendline support, with a triangle as well right there. JJU, aluminum, maybe a trend line. We need a reaction here. JJC, copper, it's kind of a messy chart, not one of my favorites. Just move on. Another copper ETF. PALL, palladium, still liking that. I like the gold, silver, palladium right now, even platinum. You look at the 60-minute chart, you have this positive divergence continues to build, and you have a trend line there to target. Same with PA, the futures. And then cane, sugar is looking a little lofty here. You have a small divergent high on it. This one was also mentioned not so long ago as a re-entry or alongside trade. There was a downtrend line, divergent low right here. That gave us a bullish falling wedge. We broke out, been zigzagging higher. It's at new multi-year, or even I think it's just multi-year highs. But that little divergence right there gives me a little pause there. SGG, so I wouldn't be chasing it now. Same thing, another ETN covers sugar. Negative divergence as well on that one, although again it's also as expected back here. I told you we had this trading range, and we expected a breakout to new all-time highs or multi-year highs, and we got that, so we are above it, and maybe we just have a little pullback and then continue on. Look, we could pull all the way back. Here's an uptrend line, and that would still be bullish in an objective level to add on if we did. And again, I think we're in an inflationary environment that is here to stay for the time being, and so these commodities should be a beneficiary of that. PPLT, platinum, a nice support right here. You can see I'm drawing the line here, reactions from above, reactions from below, reactions from above, above. Slice through it a few times, but there's enough reactions in there, and it'll probably want to run with gold and silver and palladium. And also oversold, you can see that, and that's the last time we were oversold was right here, and from there platinum rallied 31%. Okay, and that's it. I'm gonna get this video out to you guys, and I'll keep looking for new trade ideas, but as of now, let's focus on these. This has been Randy Finney with Right Side of the Chart. Have a great day.